Now we are in a very fast world and accidents can really happen. You can be the safest driver in the world, but then it's not your fault. Still you can meet with an accident. You might be going for a walk 5 kilometers every day. You might be doing yoga, pranayam and all that. But what your grandfather used to have as a non-polluted environment, unadulterated food is a dream today.
If I'm already having a health insurance, why should I have an accident insurance? Namaskar and welcome back to the second episode of this important series on financials and personal finances. In the first episode, we have talked about discipline, we have talked about long-term, short-term investments, and we have also talked about the discipline kind of concepts. Today, in this episode, we are going to have a different discussion on insurance, investments kind of things. We are continuing with our guest, Mr. Pramod Deshmukh. Hello, sir, and
Hello.
welcome to the second episode.
Hello, my pleasure to be here.
So, sir, one important question, and we continue it from the last discussion which we had, is in terms of insurance and different investment options an individual should have. So, what are your thoughts on this?
As we saw in the first episode, we have to start with the emergency fund. Later on, we should have insurances in place, and I had talked about three major first steps in insurance. Now, before that, I'll go into what is insurance and why insurance. Insurance is making good the loss. जिसको हम हिंदी में कहेंगे, अगर नुकसान हो रहा है तो उसका मुआवजा मिले. मराठीत नुकसान भरपाई. Now, if I'm moving on a bike, I meet with a road accident. There is a loss. And if there is a loss, I want someone else to compensate that loss to me. And that will be compensated by an insurance called personal accident insurance. Now, we are in a very fast world and accidents can really happen. You can be the safest driver in the world, but then it's not your fault. Still, you can meet with an accident. You're working in an industry, something can happen, and accidents happen even in industrial environment. Accidents, small accidents are no problem, but if there are major accidents which incapacitate us and lead to a loss of income, then personal accident is the policy we must have it in place. I know of a person last week in one of my manufacturing clients' place. He got hurt here and his eyesight has gone for last 3 months. 8.5 lakh rupees have been spent. 3 months he is not working. Who is going to compensate? Company has a limit how much they can support. No personal accident insurance and the family is bleeding, and now their peace of mind is PIECE. So the first important insurance required is personal accident insurance. Let me remind you that in accident, there could be a temporary loss or a permanent loss of some part of your body. And if there is a permanent loss, then also there is a huge compensation which comes from the personal accident policy. Its cost is very low. I recommend it very strongly to the viewers that you must go in for that. The second is health insurance. Again, you might be going for a walk 5 kilometers every day. You might be doing yoga, pranayam and all that. But what your grandfather used to have as a non-polluted environment, unadulterated food is a dream today. With those things, and moreover, today is not a 9-to-5 job. We have a lot of stresses at home, at work. Stresses at home also. And with all this mounting up, stress-induced illnesses are on the rise. And those really are creating some critical illnesses. And normal illness is fine, but critical illness calls for hospitalization. And in past, they used to say that we should not walk the staircase up in a court. But now I will very strongly say that we should be very wise not to walk the staircase of a hospital, because hospital is costly. Hospitalization is very costly. Of course, there is a lot of technology, there is a lot of specialization come in, but then it is at a cost. Now, you don't want to get burdened with this cost. health insurance becomes a necessity, especially when there is a critical illness. I know of a person who was doing extremely well in sales in a limited company in an automobile organization. At the age of 46, he was almost going to be all India sales head when he got a heart attack. Forget the expense part. He also lost a very good career after that because he had to request the management to give him a less stressful job and so a back end office work in sales. He retired only as a AGM sales. Otherwise, he could have become a sales director also. So, taking care of health is important. Having a health insurance is also equally important. And then we come to the third part. If the accident doesn't kill you or the illness doesn't kill you, then those two insurances are there. But if the accident is fatal, then we must have a life insurance. If the critical illness becomes fatal, we have to have a life insurance in place. And so these are the three insurances we must have. So, in fact, we must create emergency fund so that we can move into this. And again, create emergency fund. So the emergency fund remains and these emergencies are also tackled. So these are the first insurances which we should do. Allow me to explain the role of insurance. We talked about saving, we talked about insurance, we talked about growing wealth. Where is all this going to happen if there is no insurance? As I said, insurance is a safety net. And if there is no safety net and you fall from the top, you will crash. So our savings and investment will crash without insurance. And so insurance is important. Let's say there is an earning member. I'm going to talk about 4 C's. The first C is called creation of income. And career is there to create. Whether he is a freelance, whether he is a business owner, or whether he is an employee, he is going to create income, the first C. Now, from that first C, there is consumption, which takes care of day-to-day living and day-to-day all school expenses, mobile expenses, internet expenses, all those things. Consumption. Now, what is balance is conserved, saved. So that is the third C. So first C is income, second is consumption, third C is conservation. Now, from conservation, we will have emergency fund, short-term, medium-term, long-term goals. Now, all this is going fine till the creation is going on. Due to accident, due to critical illness, or due to any other reason, if the death occurs, the creation stops. But the consumption and the conservation and the multiplication has to continue. The family has to live. The children have to go to the school. If there is a house without a home loan, fine, but with a home loan, there is going to be EMI. So everything has to continue, but the creation has stopped. So someone has to come in place of that. And what comes in place of that is the continuity of income, which is through insurance. And that is why life insurance becomes a very, very important part. You cannot build savings and investment if you do not have a continuity of income due to life insurance. So that is the role of insurance in the 4 C's. So 4 C's, again, I will repeat for the viewers' benefit: creation, consumption, conservation. And to keep the consumption and conservation continued even in absence of creation, insurance is required. Now, absence of income can also occur because of retirement or due to job loss. That time, again, that insurance will help to take care of the consumption as well as keep building the conservation. That is the importance.
Here's the one of my friends, when we were having a chit chat, at that point of time, one question came that, boss, if I'm already having a health insurance, why should I have an accident insurance? So even I was not able to answer this question. So can you just help us understand that what is the
Yes.
difference between the personal accident and the health insurance? Are they both complementing each other, or they are standalone products and they are meant for different reasons?
Okay. See, if an accident happens and the person is hospitalized, health insurance will help till the time he's in hospitalized. In the hospital, they have put some rods and all those kind of surgery he has done, and then he's plastered and he's sent back home. Now he is at home, but he cannot go for work. So that's where the weekly compensation which comes from the personal accident policy will support him.
Okay.
He is not in the hospital. While he was in the hospital, health insurance was taking care. But he is at home, he is not at work. He is not able to work because there is temporary disability. That is the time when the personal accident is going to help. So both are different, both serve a different purpose, both are necessary, they complement each other.
So you want to say, sir, that the treatment part can be taken care by personal accident, or the treatment part has to come from the health insurance?
Treatment part will come from the health insurance.
So what happens in those cases where the employee or the person is having personal accident but not having health insurance?
See, some part of it will be covered, but then there are many ifs and buts. Because personal accident is main for ensuring that there is a compensation of income because of incapacity which happens due to an accident. Whereas mediclaim is supposed to take care of hospitalization expenses. So both of them are catering to different needs and both are required.
So dear viewers, today at least I have learned a very important and a new thing, that personal accident also gives you a kind of income once you are shifted from hospital to your home and you are getting accustomed to the new way of living. So at that point of time, whatever loss of income you are having, in some way it is getting compensated from accident insurance, but the same thing is not being given by the health insurance. So why this insurance is considered very important for personal finance management? Some points you have already touched upon, but if you can just elaborate a bit more on this, that without insurance the other things cannot go forward.
See, like when we climb a staircase, we have to first put our foot on the first step. Emergency fund. Second, health insurance. Third, personal accident insurance. Life insurance. Then saving. Then short term, long term, all those kind of investments. So insurance is like a foundation. If you don't do that, you're not able to really climb up the staircase.
I think the viewers have already been hearing about it, that there are various types of insurances right now. So when one should have what kind of insurance? How to take a decision on this part? If you can just help our viewers to understand on that.
See, health insurance a person should have all the time. In fact, even for children, the parents should take the insurance because you never know what kind of a illness will strike when. I know of a person who's a production manager in a manufacturing company. His nephew, aged 4, at the age of 4, going a spine surgery in a very reputed hospital in Pune, 37 lakh rupees spent. They had an insurance of only 5 lakhs. So when I talked about adequacy, this is very important. Now what happened is they had to beg, borrow and steal money literally to raise 32 lakhs. The father had to sell a plot in their village desperately to get the money. Now this is all desperate measures if you do not have a proper adequate insurance in place. So children should also be covered, working professionals should be covered. And what about parents? Parents have brought us to this level, and at the advanced age, is it not our responsibility to take care of their hospitalization? So health insurance across all age groups is important. A few years back, only when nationalized insurance companies were doing the insurance, health insurance, after 60 the insurance was not available. It was ridiculous because that is the time the insurance is required, health insurance is required the most.
Correct.
Now, thanks to the private insurance players, the health insurance is available even beyond 60. In fact, in my own mother's case, I bought her an insurance, gave her as a gift on her 80th birthday. So that is the longevity we have, and that's why we have to really ensure that we have health insurances for all the age groups.
Sir, here in the health insurance, we have known that many companies do give health insurance to their employees.
Yeah.
So in this particular case, if an employee is already having an insurance from their employer, do they need to have their own health insurance, or is it okay to have only the corporate company covered insurance?
See, many corporates, as a part of their employee care benefit, they ensure that the employees are covered under what we call the group medical insurance. However, group medical insurance is not the top-end model of a health insurance. It is given because just in case there is an emergency, we should be able to take care of the employee. So the values are usually 3 lakhs, maybe 5 lakhs maximum. So to have a bigger insurance, one has to go in for a personal policy, individual policy. Second very important thing is the cover in the corporate insurance is only till you are an employee. Most of the HR departments remove or delete the name as soon as the employee has resigned. And people at middle level also have to serve a notice period. During the notice period, he has not joined the new employer, so that cover has not started. But this cover is already out. So during the notice period, the person remains without any health insurance. And that is why today when people have a lot of opportunities and they don't have a lifetime employment with any employer, this is a must. You have your policy and you carry wherever you go. Keep company health insurance of group medical as an additional add-on. But you go wherever you go, you carry your insurance policy. So it's very, very necessary to have an adequate care with your own health insurance policy.
So, my dear viewers, as you have heard from the expert himself, that only the corporate insurance or the employer provided insurance are not enough. You should have your own parts as well. So, now we are moving in the next part where we are going to talk about the assets part. So, sir, throw some light on different kind of assets an individual should have, which can help them in investment or securing their future.
Okay. Now, whenever we talk about investment, the word ROI, return on investment, becomes very, very important. And so, only when we are talking about investment, we should start looking at investment options which are available in the market. When we are talking about health insurance, ROI is not to be considered at all. When we talk about life insurance, ROI is not important. When we talk about personal accident, ROI is not important. You are sending your son to a school. Are you looking at return on investment on that fees paid? No. Those are things which are called necessities, absolute necessities. Now there is a surplus and you want to grow wealth out of that surplus. That is where you should start looking at different investment options. Now, investment, one thing which is very important is risk and returns. They always travel together. High risk, high returns, medium risk, medium returns, low risk, low returns. Majority of the Indians today, even today, prefer fixed deposit in nationalized banks as an investment tool because there is a low risk and low return. They don't care about the low return, but they want the principal, the main corpus. So there the return of investment is more important than the return on investment. Now that is their way of looking at it. But let's understand the interest which we get on the FD, fixed deposit, is taxable. Moreover, that rate is always lower than the inflation rate. And so if you have to beat the inflation, then FD may not be the best tool. But yes, low risk, it is the best tool. You go to life insurance products, they are a little better on returns, but very important, they are tax-free returns. So it's definitely a better instrument when it comes to low risk and tax-free. Now let me have two words here, guaranteed returns and tax-free returns. There are events in life which are called sure time events. A child is born, after 17 years, the child is going to go into college. Normally, school education is not that costly. It is costly, I know, but not that costly. But college education is really very costly. And so, college education fund should always be done on guaranteed and tax-free returns. They are trying some stunts like a market-dependent product could prove a little risky. But of course, if someone has a risk appetite, he can go in for that. But if my recommendation is asked for, I will say child education, child marriage, and even retirement fund for self. These are sure time events and they always must be done through a guaranteed tax-free instrument as much as possible. Now, once these are in place and still you have surplus, then let's go in for other avenues. And the most popular avenue these days is making a real estate house investment. Now, here I will say about real estate, the first house is absolutely a must. It gives security, it gives peace of mind. But a little caution again with people not planning to settle down in the same city, having options in different cities, different countries. Today, the generation of 30s is not looking at real estate as an investment option because they don't want to be tied down to a place. Real estate, you get tied down to a place. Real estate, you get tied down for a long term liability of paying back that home loan. So, real estate is a good option, but then it has different other angles also to be considered. First house is a necessity, second house is an investment, and you should do the second investment only after you have finished the sure events and you have addressed them with tax-free and guaranteed investments. And then will come the market-dependent products. Market-dependent products like mutual funds, stocks. Even today we talk about cryptos. They all carry risk. And if the person has got the appetite, then he should go in for that. But before a person chooses that, he should first assess what is his risk appetite.
So we have been hearing a lot of times this risk, risk, and risk. So now I'm going to put this question straight to Pramod sir. Sir, what is this risk and how to ascertain the risk appetite of an individual?
Okay. Risk is something which a person should assess first based on his income. Second, what are his family responsibilities? For family responsibilities, he has to set aside money. If he's in a joint family, maybe the expenses for consumption are more. If he has a younger brother whose education also has to be supported by him, or he has got a sister whose marriage is yet to be complete, or he has his own marriage to be done so far. His father, who's working member, is likely to retire. They have a house which is on rent. So there are so many factors which go into really decide a risk appetite of a person. And it's not a very simple formula. So one really has to take all the 7-8 points which I told and put some grading on that. And based on that, really decide. Two very important things which I will recommend the viewers here is you make that risk assessment chart and view it after a few days. Because after a few days, your mood changes, some situations change, and again do a reassessment of that risk chart. Once you do that, then you come to a real mapping of your risk. Based on that risk, then you decide which is the instrument which I should be selecting for fulfilling my returns objectives.
Right, sir. So here one point comes that these are the parameters when we look forward in terms of your responsibility as a husband, as a father, as a son. So those things are there. One important factor which comes across the economies of the world, and we call it inflation. So how this inflation impacts the savings or the investment patterns of the individuals?
Inflation erodes the investments, and inflation rate is always higher than the bank rates. The RBI repo rates are very low. And so for safety, although bank deposits are good, but then over a period of time, a little risk has to be taken. Now, let me tell you, as I said, in life insurance products with many private players also, there are instruments, there are policies, there are plans which give a little better rate than this. Point number one. Even if you choose mutual fund as a vehicle, mutual fund has a very, very wide spectrum of addressing to risk and return patterns. So very low risk also people can get into mutual funds. But as mutual funds always they say, sahi hai, but main kahunga risk hai. People must really be very, very careful because do you think you can have a child education planned based on mutual fund And now the Sensex, which is around 82, 83,000, dives down to 20,000, and your entire fund is wiped out. That is the reason why in the earlier part I mentioned that sure events, precious and very, very sacred events in life, do not take a risk. Go for guaranteed and tax-free return instruments. But mutual fund has a very, very broad spectrum addressing to a variety of people's risk and return objectives.
That was really enlightening. And this brings me to a very important question. In today's context, sir, there are various companies who are offering these kind of services, whether it's mutual fund, whether it is insurance. There are various private players as well, and I can see that every now and then there are new and new companies who are coming up and bringing up very, very lucrative products in the market. How one should choose among them?
If you are having a serious health issue related with your stomach, you will not go to a MBBS. You will go to a gastroenterologist. Right? He is a super specialist in that domain. Now, this is the most important, powerful message I want all the viewers to note, that it is very important to catch hold of super specialist. There are 10,000 mutual funds available. How do you, apart from your career objectives, find time to even read the names, forget what is their profile and what is the basket? So, tap a real good insurance house, mutual fund house, who have a very big AUM where the volatility and all that absorbing capacity is high. So always going for experts. Don't try to do, and please do not go to the WhatsApp University. Like we really went to the WhatsApp University during our COVID times. I would really say, please do not go and rely on that. There are very good share brokers, very reputed ones. There are very good fund houses for mutual funds. Please always seek their help. Expert guidance, mandatory. Mandatory.
Okay. Yeah. So this question keeps on coming in my mind. Liquidity versus insurance. How to maintain that?
Okay. See, mutual funds are very highly liquid. That's their plus point, but that's also the minus point. Because the moment there is liquidity, the tendency is to take out that money. The moment you take out the money, your long-term goals are affected. Insurance, on the other hand, offers very poor liquidity. And it offers liquidity only in case of very big emergencies. It's not very easy. But that itself, that disadvantage which many people think, itself is an advantage because the money stays there for long. So insurance for a real long term is a good vehicle if you do not have the discipline of liquidating the mutual funds. See, mutual fund you have kept, let's say, for a retirement corpus. But a new vehicle comes in the market and you say, I want to take the money out from mutual fund and buy. Now, what you have done is you have taken the retirement fund and used it today. So your future money, you have used it today, and as a result, you are going to be suffering in future. It is same like the employees in the organization withdrawing money from the provident fund and using it for some present requirement. So that's a bad discipline.
One question, and I think this word you have already used in the conversation, adequacy. So how one should define the adequacy of whether it's a savings, whether it's a insurance, or whether it's the asset generation kind of thing? How one is going to decide the adequacy of these things and then accordingly plan? Because unless we have the goal in mind, how much we need to save. So how are we going to arrive at those adequate numbers for us?
Okay. Now, adequacy will differ from person to person, obviously.
Yeah.
From his, whether he belongs to the lower middle class, upper middle class, high class, or whatever, very high HNI. So adequacy definition will differ. But I would say there is a thumb rule which we can take. And since we are focused on insurance in this aspect, in this episode, let me focus on insurance adequacy. Personal accident insurance should be at least 5 times your CTC. Health insurance should be minimum your CTC or even double of that CTC. There are certain companies who give a very fantastic bonus rates. So you can have a smaller health insurance to start with, but then if you don't claim, their bonus rates are good. And so over a period of 5 to 6 years, it really becomes a very, very good health insurance policy. For life insurance, at different age groups and at different stages in life, I would say at the age of 25, he should have 12 times of his CTC as his insurance cover. The money which comes on death to the family. Every 5 years, this number can go down for two reasons. Like from 12, it can go down to 10 because his salary is also increasing, but his responsibility is also increasing. So that way, at the age of 50, maybe he can have 6 times of his CTC because salary has gone up, and education-wise, a lot of responsibilities are already over. So adequacy, there is a formula. I will definitely like to share it in our visuals here, and let us share with the viewers so that they can do some sort of a calculation and find out whether they are adequately insured or not, and if not, take steps to really cover that adequacy gap.
Thank you, Pramod sir, for talking us through this episode where we have looked at the savings investment kind of things. In the next episode, we are again going to deep dive into few more aspects. I request all the viewers to stay connected with us. If they have not subscribed to us so far, kindly subscribe to us and kindly share this video to whomsoever you feel they can be benefited from this. Thank you for joining in. Thank you, sir, for this episode.
Thank you very much. My pleasure.